This is going to go super fast. We're not going to go into a lot of detail. There's a really good tax update class Saturday. Recommend you take that. I think Christy Thieman's doing that. I think Chris Wilson's doing that. Phenomenal franchisees. Going to talk through some of these things. So this is just your quick hit. There's only a couple slides here, but things you guys need to be aware of for this year, because it's going to be crazy what we can do for clients. Some of these tax returns we've done so far have been amazing. People have got more money than they expected, more money than they thought they were going to get. So just absolutely phenomenal opportunities to be there for our clients and help them out. So first thing, can you believe it? Stimulus was last year. There's still one more stimulus that's got to be reconciled. That's the $1,400 stimulus, went out last spring. So we had, last year we reconciled, we did stimulus 1, stimulus 2, filed the taxes, they claimed the RRC, recovery rebate credit, got those. There was another credit that came out. Some people got it, some people didn't. $1,400 per taxpayer, $2,800 for joint, and all their kids, and all their dependents. Show me the money. If they didn't get it, we'll give it to them now. We're going to talk more about this, though, in a few minutes after we get through this, because there's some things we want to think about on this. Well, let's just do it right now. We know if a client comes in and they say, I didn't get my stimulus, we can claim that stimulus on their taxes. So I didn't get my stimulus. How much did you get? I'm still missing $1,400. We claim it. But we know the IRS this year put a tremendous delay on processing those refunds because of that. They're trying to trace it. They're saying you sent it. You're saying I never got it. They're saying I sent it. We're saying liar, liar, pants on fire. I'm talking to Carson. Do we call the advocate? We file a claim for refund. What are we going to do? They won't do the trace. So here's where we are right now. More to come on next Thursday's update. But right now, if they've got other things on there, they've got the child tax credit, they've got a big refund coming, I'm recommending to our clients that we do not file for the stimulus 3.0 on the first return. What do you mean? Not giving up money? No, I'm not giving up money. I'm saying what we need to do, file the return, get the child tax credit, get their refund. As soon as they get their refund, call and say, I got my refund, Patrick. And we throw up the balloons and the confetti, and then we go in and we amend that return and we claim the other stimulus money. I don't want clients having to wait another 6 months for this money, not getting it, calling me upset. They need money. They got to pay their bills. They got daycare. They got milk. They got all those things they need. So we're saying is they can get this stimulus, but right now what we're thinking is don't put the stimulus on the return, but do an amended once they get their refund. So more to come on that. We're going to get that figured out, but that's kind of where we're leaning right now is claim everything else. Get your refund, then we'll do an amended. Well, how do we charge them? Are they going to have to pay for that amended? So here's what we're saying. We're saying if they come in and they want it, we're going to file it without the stimulus. We're going to add $50 to the bill. We'll go through next week how to add stuff to the bill. We'll get blockworks and all that stuff. We'll add $50 for that amended, prepaying that amended, and we won't. That's the only thing we'll charge them. We won't charge them the full amended and everything else later. But that way they get their money. They don't have to worry about it. As soon as they get that refund, we file that amended. So more to come on that. Definitely want to keep you guys in the loop with that. But I can't even believe that stimulus was this last year. All right. Advanced child tax credit. Everybody knows about this. Everybody's been getting these checks in the mail. IRS came in and said, whoa, whoa, whoa. We're taking child tax credit from $2,000 to $3,000. And if you're between age 1 and 5, we're going to give you $3,600. We're almost doubling it, and we're going to get half of it to you throughout the year. And wait, even more, we're going to go from age 16 to age 17. Child tax credit stopped at age 16. Now it goes to age 17. Child tax credit used to not be refundable. $1,400 was refundable as additional child tax credit. Now we're saying all $3,000 or $3,600 is going to be refundable. So that makes it a great opportunity for that. So we definitely don't want to do that. All right, moving on. All right, having fun. We're doing good. All right, age 17, fully refundable. But here's the problem. It has to be reconciled on this year's taxes. All right, so here we go. The clients have to reconcile. This is probably the most important thing for you guys to realize right here. We have to get the letter in the mail from the client showing how much they got. So this is an actual real life client got this in the mail. This is what they got. It showed up. This is what it looks like. What did the letter inside look like? It looked like this. Now, it didn't look like the finger. The finger was added to the picture later. It did not come with the finger on the picture. But this is what it came like. So this says how much money they got for the additional child tax, the advanced child tax credit. Child tax credit advance that they got, not advanced child tax credit. See what I did there? All right, so here's the deal. If they don't have this letter, we need to verify how much money they got somehow. You can look at their bank statements. You can look at this letter. But if we don't have something like this, we're going to get something that they've got to sign or something. We got to find a way to do this, because the problem is that we need to pull an account transcript. We need this letter. We need something, because we don't want another 6 to 9 months process, then say they didn't get their refund. We need clients to get this letter. We need clients to bring this letter in. I've got a letter I'm going to mail it out to people on Monday. It's going to say, bring me this letter. I need it. It's going to be important for everything that you do. This letter is going to be crucial to what we do. There's the envelope. There's the letter. We've got to reconcile this on the 2021 taxes so we can reconcile it and tell them how much they got so the refund's not delayed. Now, here's the other thing. They have to reconcile this. If they got too much money, they got to pay it back. Now, if depending on their low income, they may not have to pay it back, but they've got to file and reconcile this and show what their income is and so much how much they got. Because if they file and they got too much, they're going to be sending back a letter to their favorite uncle, a check to their favorite uncle. So make sure we get this, make sure we understand this. That letter is so more important letter than we've ever got from the IRS. We need this letter. Here's what it looks like. Now, we'll maybe talk about that more, but I'm running out of time. I'm going to end this call on time no matter what. I got 17 minutes and I only need 13. I got 15 minutes and I only need 13. So I'm in a good place. All right. Earned Income Tax Credit, EIC. This changed dramatically. This changed in 2 different ways that affect the 2 large ways. Okay, 3 ways okay, 4 ways. Okay, this changed all over the place. This is a whole new credit. What changed? If you're filing and you're getting the earned income credit and you don't have any kids, you can now get up to $1,502. That's almost 3 times as much that they can get. Okay, what else? Generally now you can actually get that starting at age 19. What was it before? Age 25 to age 65? Had to be over 25, under 65. Now there's no age cutoff, so anybody can get this. You can be age 70 working part-time as a greeter at McDonald's, or not McDonald's, you're not greeting McDonald's, you're greeting at Walmart. Who knows what you're doing at McDonald's, you're eating French fries. So you can be filing and you're going to be able to get up to $1,500. So you got it. You've got a nice old gentleman working at Walmart as a greeter, talking to everybody, hopefully not shaking hands because of COVID and stuff. You know, you got to use a hand sanitizer, got his mask on, working down there, makes $6,000. Makes $6,000. He's not going to owe any income tax. The standard deduction is $12,000 plus. So he's going to get that. Plus he's going to get his $1,500 earned income credit. This is good for your senior population that's used to not filing. Guess what? They need to file a return. This is also good for those people that are younger that maybe used to not get this because they had to be 25. Great credit here. But beyond more, here's something that's huge. And this, I want to make sure you guys get this. Once again, if the client has income less than the income they had in 2019, they can actually use their 2019 income for their EIC. You say, oh, Patrick, did you say that wrong? Did you mean 2020? No, I did not. I meant 2019. They can use their 2019 income for their EIC in 2021. Why 2019? Because that was the last normal year that we had. Might be the last normal year we ever had. 2019 wasn't that normal. I'm going to pull up some things that happened in 2019 to show you how unnormal it was. But whatever their income was in 2019, they can use that to qualify. They may potentially use that to qualify for earned income credit in 2021. Now, here's the deal. Second look's important. Getting a copy of that tax return is important. We did dozens and dozens and dozens of these last year that got clients so much more money back. Make sure we're looking at that. Make sure we're not ignoring that. That's going to be huge for our clients. It's all about helping the clients get where they need to get. Our job is to get them as much money back as possible. Now, is it wrong to only use the 2021? No, perfectly right. But our job is to find the best possible refund, and there's more than one right way to file a return. We want to file the best way. We want to look at 2019, see if that's better. Look at the 2021. You have somebody who's self-employed who didn't make a lot of money. They use their 2019 when they claim that money. You're saving them the self-employment tax. You're saving them all the other problems that come along with it. You're getting a nice refund. They're happy. It's good. Make sure you've got the data, got the information. One more change to EIC. Investment income has now been increased permanently to $10,000. I had a couple clients come in last year. They made like $4,000 trading stocks, paying GameStop-y type things. Next thing you know, hey, look, that $4,000 you made on TD Ameritrade just cost you $7,000 on your refund. They're like, oh, it hurts. It kills. I say, I know, but now it's not a problem anymore. $10,000 limit on investment income, that's permanent. It'll go up every year. EIC, what do we got? No kids, up to $10,000. Age 19, generally starting at age 19, going all the way up. Doesn't matter how old you are, we'll give you money no matter what. And you can use 2019 plus your $10,000 for your investment income. All right, man, probably one of my favorite credits out there right now. Child Independent Care Credit. Now, this is only for 2021. Daycare credit was always a fun credit. There was no income, it was no phase out. You could get up to 50% and go down to 20%. Really nice credit, and anybody could get it. You could make $1 million and say, give me my $240, and I'd say, you got it, buddy, no problem. Now, there's some income phase outs. It's kind of a weird things in there. Luckily, we've got a great tax software that's going to take care of those phase outs for us. But here's the deal. You can now get up to $8,000. $8,000 worth of credit. You're going to get up to 50% of your qualified expenses of $8,000 to $16,000. This can be an $8,000 credit if you paid that much in daycare expenses or child care expenses. It's huge. I don't even know what it's going to do to Arkansas when they're giving you 20% of that. How that's going to work itself out. I haven't got that far yet, but we're looking at what this credit looks like here. This credit is huge. Now, how is this credit so big? One, I don't know. They just made it. Oh, it's all refundable now, too. More money back in your pocket. But where are we missing out on this? People have jobs. They're going to work. They're paying people to watch their kids, and they haven't been claiming it. They say, oh, the girl down the street does it. She doesn't want to mess with it. I know I paid her $3,000, but we're not going to worry about it. You paid her $3,000. What do you mean we're not going to worry about it? That's $1,500. You paid her $3,000. Even if you got to pay her self-employment tax, and you've got to give her $600. Give her 20%. She gets $600. You get $1,500. Hey, look, you're still money ahead. Guys, this is an opportunity that you've got to use, but it's going to take you explaining it to people in a way that makes sense, because they look at it and say, oh, I don't want to claim it. Well, you should claim it. You should just give them the extra money. You get 50%, so why don't you give her 20? Give her 25, split it. You both got $750. Come on. It's a winner chicken dinner. You definitely want to make sure that you're looking at this credit, using this credit, because this credit can change people's years. It can change their refund. It can change everything. Imagine if I was paying grandma to do this to watch the kid, and grandma is 70 years old, hadn't been working. Grandma now claims this money that she got paid. She's now getting $1,500 self-EIC, plus you're getting all this. Man, the possibilities are, they're not limitless, but they're pretty big. I mean, the Chinese buffet eventually closes. It's not limitless, but it's big. There's lots of it out there. Okay, income deduction exclusion. I got 8 minutes, man, and I only need 6. I'm 2 minutes ahead of schedule. I'm doing so good. I get to slow down and talk about non-itemized charitable contributions. Man, I tell you what, I like this one. You don't have to itemize at all. and you can still claim up to $600 off of your taxes. It wasn't the $600 last year. It's gone up. It's $600. So you're in that 10% tax bracket. That's $60. I'll take $60 if they don't want the $60. It's a good deal. You get in that 22% tax bracket. Holy smokes, I can't even do the math that fast, but that's a lot of money. So let's make sure we're looking at this $600 non-itemized deduction that they can get. $300 for a single person. If they have a taxable income, they need to be claiming this credit. I'm just telling you, they can give those stuff to. So they can be giving money anywhere as long as it's qualified charity. And if they gave it, we want to take it. All right, medical expenses. We used to say for a long time, if you want to deduct your medical bills, best thing you do is go marry an old person. You're at 10%, you marry an old person, you go down to 7.5%. Now I'm almost an old person, so I can say that. You're going to go down to 7.5%. Well, now everybody's 7.5% permanently. Well, ain't nothing permanent with the IRS or Congress. It's 7.5% of your medical expenses goes towards your itemized deductions. We know that any student loans they forgive between 2021 and 2025 aren't going to be taxable. Now this one's the only one that's not fun. Unemployment benefits. Unemployment was not taxable in 2020. Well, it was, and then it wasn't. Because it was, and then it wasn't, and then it was, and it wasn't. You got to go back and forth a little bit, but it wasn't taxable in 2020. Eventually, it wasn't. Unemployment right now, it's taxable in 2021. So you are going to pay tax on unemployment. Make sure you get their statement from them. Make sure you get that 1099-G. Get that in there because it's coming back, baby. It's back. All right. Premium tax credit. Now, last year, they did this thing where they suspended where you didn't have to pay it back. Man, that was so nice of you. There are certain things in there this year of unemployment. There's certain things on there. They've increased the phase outs. No matter what, they even did away with that 400% of federal debt stuff. What does this mean to you? What this means is people are going to be getting more money back on their premium tax credit, and if they got to pay it back, they're going to be paying back less. So you're going to see a big difference on this. Get your 1095-A. It's going to take care of it. It's going to do it, but it's going to help them more than it's ever helped them before. They're going to pay back less than they had to pay back. This is a big deal for a lot of clients who are getting insurance through the marketplace. All right. This one's no fun either. I guess we started with fun. Maybe I got a fun one at the end. Let me look and see. No, that's not very fun either. That's not bad. All right. So we know that a couple of years ago, we were pushing for the protective claim for refund. Protective claim for refund said, I don't know how I feel about that penalty I paid for my insurance. We filed stuff with the court so that if the court ruled our way, we could get that money back for our clients. Well, it's courts and they didn't rule our way. They make the laws and they host us. So if they filed a protective claim for refund, it's being dismissed. They're not going to get the money. The court ruled against us. What we filed was not amended. What we filed for them was a claim to suspend the statute in case we won. We filed the claim. We're not refunding money to the clients because that's what they paid us for. We always told them there was a risk on it. But if they asked about it, it's the court ruled against us. We don't get that money back. And don't file any protective claim for refunds or amendments because they're not going to get that back. Child tax credit. The lifetime learning credit is increased, so it now lines up with the American Opportunity Credit, and the tuition and fee deduction, it's gone. No more tuition and fee deduction. All right, 100% meals for 2021. Woohoo! 2022. If you dine out at a restaurant or at a public facility, so restaurant, cater, takeout. If you're eating at a restaurant, 100% deductible. 100% deductible. Now, we know that meals entertainment used to be 50%. So if you're getting stuff from a grocery store, I'm going to skip the liquor store because surely you guys aren't doing that. Convenience store, vending machine, still 50%. But it's basically this credit was passed to incentivize people to go eat in restaurants. Restaurants need food, love too. Okay. 1099s. We know that anybody who gets over $600 now is going to get a 1099. This is your gig. This is your Uber Eats. This is your Lyft. This is your DoorDash. This is people selling on Etsy. Used to be there was a transaction limit. Not anymore. No minimum transactions. And they're going to get it. It's going to be for goods and for services. It's going to include your friends and family. I don't know how they know who your friends are, but they're going to figure out how to do it. Trying to reduce that cash economy stuff. All right, almost there, almost there. I still got, oh man, I got 2 minutes. All right, last year we had a great credit out there, the 7202. If you had COVID and you had to either take off time for work because you had COVID or you had to take care of a family member, we got you a phenomenal credit on your Schedule C. That credit's still there, 7202. Remember it from last year. We talked about it. It's there. Don't forget it. Real fast. Man, I'm quitting on time. 2 minutes. Okay. Things that went away. Child tax credit increase being as big as it is, that was only for last year. Right now, there's no monthly checks coming. Will they come back? Probably, but the monthly checks are gone. QBI, it's there for last year. I'm not sorry. PMI, private mortgage insurance, it's there for last year. It's not there. It's not there for 2022. Charitable contributions for itemized, $600. I love it. It's gone for 2022, but it was there for last year. Non-energy credit, it's there as well. That's tax update really, really fast.